All right, what's going on, guys? Welcome to strategy creation. I guess, what is this? Day 28 at least, and strategy creation, I think let's figure this out. Let's figure out what period of strategy creation this is. Strategy creation part 4. So right now, our strategy consists of this: 4-hour bias based on the trend. 1 hour determines what time frame we can scale into to take trades, okay? If in line with, with 4 hour, 5 minute. If not, we go to the 15 minute. Okay, from there, let's put this shit here. And then from there, we scale into whatever lower time frame, LTF. Scale into lower time frame, look for high time frame liquidity sweep. Okay, so either on the 1 hour or the 4 hour. And then from there, scale into lower time frame, look for break of structure and a third confluence. And then from there, we can scale down lower time frame. If we were on 5 minute, we can go into 1 minute, 15 min to 5 min, and find a break after entering into the third confluence. And I'll just hit a little return right here. Okay, so right now it looks like this. We find the 4 hour bias. We see, the 4 hours bullish, cool. Our overall bias for the day is going to be bullish. From there, we scale into the 1 hour time frame and we see what's the 1 hour bias, okay? And that determines what time frame we can scale into to take the trade. So if the 1 hour time frame is in line with the 4 hours, so let's say the 4 hours bullish and the hourly is bullish, cool, we can scale into the 5 minute time frame. If the 4 hours bullish and the hourly is bearish, we scale into the 15 minute time frame. From there, we go into the lower time frames and we look for a high time frame liquidity sweep, okay? So we're looking for liquidity on both the hourly and the 4 hour. From there, we're not doing anything until that liquidity gets hit. Once it gets hit, we can scale into the lower time frame and look for a break of structure. Break of structure. Again, if the 4 hour and hourly are in line, we're going to the 5 minute. If the 4 hour and the hourly aren't in line, we're going to the 15 minute, looking for a break of structure, and then a third confluence, okay? So that could be boom, break of structure, and then we have an order block, and we're looking for a third confluence to get entered in. Once the third confluence gets pushed into, if we're on the 5 minute, we can scale into the 1 minute and try and find a break of structure within there, okay, and enter off that. If we're on the 15 minute and it's entering into a 15 minute third confluence, we can scale into the 5 minute and find a break of structure right there. That's the strategy that we have so far. Okay, so I would like to add to this now. This is what we have right now, and this is to wait for a liquidity sweep right when market opens. Sometimes that's not the case, and sometimes there's a liquidity sweep before market opens. So what we are going to add to this is going to be, if we see during pre-market a liquidity sweep and then a break to the downside, okay, first thing that we want to do, still identify the 4 hour bias, okay? And if the 4 hour bias is bearish, okay, let's say, here, let's say the 4-hour bias is bearish, and we recently broke structure on the 4-hour. But up here, during pre-market, we saw an hourly liquidity sweep and a break of structure. You're probably thinking, well, there's probably not going to be another liquidity sweep, so what are we supposed to do off this? That's when we start looking for the hourly confluences. So what happens when we get an hourly sweep and a break of structure to the downside? We form order blocks on the hourly, we form breakers on the hourly, we form fair value gaps on the hourly, we form equilibrium on the hourly. And from there, we treat these confluences as our high time frame sweeps, because the high time frame sweep has already happened during pre-market or maybe during London session, whatever. And market is already moving in the direction that it wants to go, right? Which is what the original strategy is based off of. Trying to find the start of a move, right? Trying to enter up here. What happens if this has already happened? Well, we can still trade the continuation of that hourly trend. And that's what we're going to talk about today. So, on top of that, if we see a hourly or a 4-hour liquidity sweep, we're still going to follow this. We look at the 4-hour bias and we look at the hourly bias. But if we already see a sweep has happened, and I mean like just recently, like, let's see if I can find an example of this. Okay. No, I don't want that. Okay, let's use this as an example. Okay, let's say that this is a market open, okay, and we sweep out these highs, okay, and hypothetically, let's just say that the 4-hour is bearish, and the hourly, we see a sweep of these highs and then a break of structure. And let's say like right here is market open. Obviously, we already see the sweep, and we know that our bias is bearish, and the hourly bias is bearish, but we're saying, hey, odds that we're going to, if the hourly and the 4-hour bias is bearish, what are the odds that this is the only high that we have currently? Let's say that like this is price action. This is the high that has to be swept. You're probably thinking, oh, we can't even take a trade today. Well, no, that's when this addition to the strategy comes into play. That's when we can say, hey, look, there's a fair value gap on the hourly. There's a order block. I can't even see. Yeah, boom. There's an order block on the hourly right here. Okay, there's a breaker right here on the hourly. Okay, and from there, we use these confluences getting entered in similar to the liquidity sweep happening. So if we already see a liquidity sweep happen and like a break on the hourly, then what can we do? We can target hourly confluences. So let's say price enters into a fair value gap, market opens. What are we going to do? If the 4-hour bias is bearish, the hourly bias is bearish, and we enter into an hourly fair value gap after a liquidity sweep has already happened, we're able to scale down into the 5-minute, and all that we're looking for is a 5-minute break of structure and then our third confluence, and then we just continue on. So we see a 5-minute break of structure, boom, 5-minute fair value gap, scale into the 1-minute, look for a 1-minute break of structure, enter off that, stops above the highs, target, again, we already talked about targets yesterday, higher time frame draws on liquidity, higher time frame confluences. And that's all that today is. We're just adding that little piece of strategy, okay, with liquidity sweeps. Let's talk about how it would work in the opposite direction. Okay, so let's say, and with the 4-hour and the hourly not in line. So let's say, boom, the 4-hour is bullish, and the hourly, we see a liquidity sweep to the downside and then a break of structure to the upside. Okay, and then boom, we see an hourly confluence, right here, a fair value gap, or fuck it, let's say order block, okay? This is our order block. And we see price draw into this hourly order block, and then boom, market opens. This is our market open. We already saw a pre-market sweep. We already saw the sweep happen. So the odds that a liquidity sweep is going to happen are low. Okay. Again, something that I want you guys to keep in mind, always be open to, again, like our best and most awesome confluence is going to be liquidity sweep. So obviously we're going to want to look for a liquidity sweep, but there's going to be obvious times like this day, for example. Like we're already so far gone. Like let's say this was market open right here. You really think that price is going to come all the way up here and give us a trade entry to be able to sweep this liquidity because the 4 hour was bearish, the hourly was bearish? But you think price is just going to mank and then go down? No. So what would we have to play off of? Hourly fair value gap. Boom, we see it enter into an hourly fair value gap. We can just use this for an example. Okay, we scale into our lower time frame. Where's the break of structure? We see a move down, then a move up. Move down, then a move up right here. Boom, we break structure on this candle. Cool. What else do we have? We have a fair value gap within here. We see price push into the fair value gap. Cool, let's scale down into the 1 minute time frame. Even, again, like this is some bullshit. This was like during Asian session or something, but this is just to show you guys how it would work. Boom, we get a break of structure right here. Move up, or sorry, move down, then a move up. Okay. We see price break structure. Cool. Enter off that. Boom. Okay. We can target higher time frame, draws on liquidity all the way down here. Cool. Cool. That's how we would look at it. Okay, let's talk about the upside, and then we can wrap this up, because this is just another addition to our strategy. And again, there's going to be even more additions to this to help you guys find a bunch of trades, because right now, you guys probably aren't finding many trades. Okay, and that was the point. We just want to start building on top of our foundation. Okay, so boom. Let's say this happens during pre-market. Okay, we have this order block. Price enters into the order block. Boom, let's say market opened like right here. We see price dipping down, entering into this hourly order block. The 4 hours bullish, the hourly's bullish. Cool. We know that we want to go long. What are we waiting for? We're waiting for a 5 minute break of structure to the upside because we moved down. We probably had to break 5 minute structure to the downside to be able to fill in this order block, right? Because it's going to be an hourly retrace. We wait for a 5 minute confirmation, break of structure out of that. We wait for a 5 minute third confluence, okay, whether it be a fair value gap, whether it be an order block on the 5 minute, whether it be equilibrium. We see price push in there, and either we wait for that 5 minute move up or 1 minute break of structure. Boom, we enter off of that, stops either underneath the fair value gap, underneath these lows to play it safe, and then we can target previous hourly highs or 4 hour highs or hourly confluences or 4 hour confluences to take our trade. And I've taken trades based off of this model before in several trade recaps. So, and those are the trade recaps where I was saying like, look, you guys won't understand this right now, but soon in the trading transformation, you guys will understand it. And that's what we did just now. So, rewatch those trade recaps. Okay, maybe potentially we might be able to get one of those today because look what's happening with price. We swept out this liquidity. Okay, who knows if we get a break to the downside. The 4 hour is bearish though. So we might be having a little sweep right now. We already broke structure. You know what I'm saying? This might be a setup. Okay. So, boom. Strategy creation. Part 4. With part 5 on the way for even more better fucking entries and confluences for you guys. All right? So with that being said, I appreciate you guys. I'll catch you guys in the next one. Peace.